The following was recorded in front of a live studio audience at the Studio 21 Podcast Cafe. This is the United Podcast Network.
Welcome to Easy Money New England.
Oh, can somebody help us here?
We can, because we are real estate and mortgage professionals. Here you go.
It says come in and browse.
That's right. Come on in, listen up, and learn.
How long do you intend to browse?
In a short period of time, our panel will teach you some tricks that might make your house buying easier.
You don't ask her how long she intends to browse.
You might not be looking for a mortgage today, but we'll get you ready.
You don't look like browsers.
Are you looking?
No, what do browsers look like?
Yeah, maybe I'm half browse.
On his father's side.
This is Easy Money New England
Let's show the lady we're browse.
with your host, Brian DAmico.
Look at us, we're browse. One more word out of you and he gets it, all right?
Welcome to another edition of our show, Easy Money New England, where we like to say there's no such thing as easy money. And today on our show is a return guest, Dan Crowley. Dan Crowley did our actual first podcast. It was on International Podcast Day, and it was very educating in the areas of commercial real estate. But we had to get Dan back on the show because in that time frame, and Dan he's basically been a commercial loan advisor probably since he grew up wanting to become one when he was like probably age 8. I mean, most people want to be a professional athlete or a garbage man at age 8. He wanted to be a commercial banker.
Yeah, they wouldn't have me as a garbage man, so I
And since that time, he's been really formulating this plan of coming out with the software system that he's basically today is the official launch. It's called Commercial Loan Success, and it's very interesting of how people can really give back the power to the people to find out, is this deal bankable when it comes to commercial property? So, without further ado, Dan, welcome to our show.
Brian, thrilled to be here. You've been a great supporter of the idea of Commercial Loan Success becoming available. And I would say to a certain degree, you've been torturing me. When's it coming? When's it coming?
Yeah.
And it's great to be here. But when you think about the fact that we've worked together for the years that we have, and that I've been blessed to play the role in some of your family's property activity, working with your dad and your brother, and of course with you, a lot of the things that took place in those tremendous relationships were the inspiration for what we've now put out into the marketplace, so that everybody can get a great level of control and some terrific levels of protection in their thought process.
So if we had a title for today's show, what would you call it?
I would say it would really be the genius of adopting the commercial loan officer mindset. Because if you really think about the ideas of the different ways that you can finance property, the way you look at property, how you value property, it's very different when it's 1 through 4 family. And then when it becomes everything beyond that. And everything beyond that is a storefront with 2 apartments above or that 5th unit and beyond.
So my title would be a little bit more simple. So it'd be like commercial loans, we make it easy.
You could look at it that way.
Or it could be easy money with commercial loans.
Easy money with commercial loans.
It could be. There it is.
All right. So let's talk about because is this considered software, hardware? What exactly is it? A software system?
It's a software system tied to an educational platform that empowers folks, depending upon what I call their angle of attack with regards to commercial finance, which could be for real estate, it could be for business property, it could be for investment property, it could be purely for business. But what's getting a lot of action in it right now is the fact that we've released the entire suite of income property analytics for both refinances and for purchases.
So say, I know a lot of commercial buyers out there. If you're driving around, this is definitely right up our alley, anyone who's a subscriber to this show. But say I was say this building, for instance, we're at Studio 21 Podcast Cafe in New Hampshire. Say I was driving by this house, I saw that it was for sale. I have my phone on me. I say, this is great. Let's see if this deal is, see if I can get this financed. How would I go about that?
First thing you would do is find out whether or not it was a business property and you were going to acquire it for the purposes of running it as a rental, or if you were interested in acquiring the property along with the business itself. Let's take income property.
Okay, so let's say it's a 12-unit property, which clearly makes it commercial. So again, 1 to 4 units is residential, 5 units and up is commercial. Also, if it's mixed use, depending on the percentage of commercial property, it will be considered as commercial property. So with that being said, so say it's a 12-unit building, and I said, you know what, I really want to buy this. It's definitely not residential. How do I, what is the bank going to look at to see if this is going to qualify, and can I do it myself?
Two different things you're going to want to get right off the bat. Number one is become familiar with the income characteristics of the property. Those income characteristics are going to be coming from two different distinct directions. Number one, the actual rent collections to do with the apartments themselves.
So that's a rent roll, right?
That is your rent roll.
So if I'm a person that's on MLS or something like that, or what's the other one called?
There's so many of them now.
Yeah,
Realtor.com.
LoopNet.
LoopNet is one.
Right. So if I have access to LoopNet or I have access to MLS PIN and I have that rent roll, can I use those numbers? I mean, the realtor's put in that number, right? So it should be accurate.
You would like it to be accurate.
You would think it's accurate, right? So if I put in that rent roll based on what they put into the system, I can use that as the rent roll.
That's a start.
Okay.
The other part is asking the good question, the smart question. Does the property deliver any ancillary income, any additional income sources? Could be laundry, off-street parking, self-storage, could be garage space. Those are not always income drivers that are organically generated. Sometimes you'll find someone who owns a property who does offer self-storage or garage space, doesn't always rent it to just the tenants. They may make it available to the market at large, but those are income sources that you want to consider and you want to be able to verify as being accurate and being current. The other thing you want to determine about the rent roll, this is really important. A lot of more seasoned landlords, they just like the warm and fuzzy feeling of the fact that they're fully tenanted. And what they will do to maintain that level of stability, especially as they've paid the mortgage down that they may have had when they bought the property, is they may actually have their rents lagging behind what the market might support at a higher level. And consequently, it's important to make the distinction between the current collection level versus what the projected collection level would be. Because from a buying decision standpoint, you want to make sure that you're only paying for value that's being delivered to you in the course of the transaction, not what's left on the table for you to collect later on, because you're the one who's going to have to take the risk in order to fulfill that higher rent level. So current collections, both to do with the actual active rents, how strong that rental stream is, and then ancillary income added on top of it are the things you want to look at from the income side.
Okay, so you have the rent roll, and any ancillary will give you all the income derived from that property. And then you have to look at expenses, right?
Absolutely.
So you're going to be typing it into your system now. You're going to be typing in the rent roll. You're going to be typing in the expenses. Let's talk about expenses. And how do you know if the expenses are accurate?
Well, here's one of the things that comes into play when you begin to adopt the commercial lender mindset, which is when you think like a commercial lender, one of our mantras, which we really do follow and we recommend to people all the time, is that if it's a good deal for the bank, the chances are it's a terrific deal for you. If it's not a good deal for the bank, then take a step back, watch out, ask questions, find out why. And part of the data collection process that you'll want to be collecting is going to be the Schedule E or the equivalent, which is where the tax reporting takes place with regards to last year's historic reported operations to the government.
How likely is it to get that Schedule E? And for people who don't know, I mean, Schedule E is the schedule on the tax return that the seller is actually putting on the tax return or what the true expenses are. How likely is it that you'll be able to get that Schedule E from the seller?
There will be pushback in some cases. In other cases, you'll have sellers and seasoned representatives of the sellers who understand that it's going to come up somewhere in the loan approval process unless it's a cash transaction. Right. They're going to have to deliver accurate numbers. So because it's a regulatory checklist item from a bank standpoint, the bank is going to insist that either a certified version that they can verify of that information is going to be provided, or the schedule or equivalent. Because if it's a Schedule E, if it's being reported on your personal return, there are other equivalents of a Schedule E depending upon whether it's held in a realty trust or if it's held in an LLC. But there'll be some unique document that is reported to the government which captures the income claimed on that on that rent roll for that previous year, as well as the expenses that are attached to it. And it's important to get that information and the subschedules because there's some dynamic value that is sometimes buried in that Schedule E that, depending upon whether you're a buyer, can be discovered, and depending upon whether you're a seller, you need to properly frame so that you don't cheat yourself out of market value.
Right.
So putting this into the software, to put it very bluntly, someone can sit down, subscribe to the system, take what is a verified rent roll and a Schedule E, and in 10 minutes know precisely where they stand in the eyes of regulated commercial lending.
That's actually, it's pretty amazing because, I mean, a lot of times you go to the bank and you really don't know until, 2 weeks or a week before closing if it's actually going to go through or not, especially in commercial. In the residential world, we have these automated engines, and, we do just that. We type in the numbers, we review pay stubs, we review W-2s, tax returns, and we'll know if it works based on putting it in our engine. But this is really revolutionary for the commercial world. And what I really like about this, it's not just so the piece that I think is great is you get a green light or a red light, basically, if it's bankable or not. And you just don't go that far. What is the next step to actually find a bank that wants to do this deal?
What's terrific about the software is that when you receive what we call a go-meter validation, that the particular transaction is financeable, whether it's a purchase structure or if it's a refinance structure. Once you have that green condition present itself, or something that we consider to be within that reasonable buffer zone to a green condition, it's going to open up what we call CLS Lender Central, which essentially unlocks
CLS,
access.
which stands for Commercial Loan Success Lender Central?
Lender Central unlocks access to and identifies the banks that are within whatever proximity you determine to that particular asset or to yourself, who would most likely be interested in doing that type of loan, that are equipped and are in the market to actually finance the kind of asset that you're dealing with, whether it be a business, income property, corporate property, or a piece of corporate finance.
Now, the banks that are in proximity, do you go over state lines? If say, for example, it's a very large deal, and maybe the small community banks can't handle a very large deal based on all the requirements today and all that kind of stuff. Does it also go out of state if you press the button and say shop the world? Or
it will give you the ability to broaden your circumference in your search area. Now, one of the things that we talk about in commercial lending is that deals that travel very far from home in order to get done, sometimes what we call they have a little hair on them. They're not very strong deals. Well, we've already determined that your particular transaction is already a green light condition. It's already been underwritten to regulatory correct underwriting guidelines that are typically used at the commercial bank level, the regulated bank level. It deserves to be there. You deserve to have that conversation with a credible commercial lender.
Let me make sure I understand this. So if I get it, so I put in the rent roll, all the ancillary income, I put in the expenses, things like real estate taxes, insurance, maintenance, if there's a property manager, what other things could be expense? Snow removal.
Here's what you look at. Occasionally what will happen is that a property owner, let's take a simple situation. There are different types of expenses. Some are long-term, some are short-term. Some are the types of things that happen every day that recur every year. Others are what we call generational expenses. A new roof.
Right.
Porches on the back of a building, an entire new mechanical and heating AC system, whatever it might be.
Really a one-time expense.
Generational expenses. Yeah. But what a lot of folks will do is that they will expense them during a given tax year. Now, if you take those numbers and add them to the current income stream, it's going to crush your numbers. It's not going to give you a fair determination.
So would you have to take the depreciation over years?
No. What you would actually do is the program is built to compensate for those general what I call generational.
Yeah, I call it one time.
Yeah, one-time expenses. You put on a new roof. Yeah. Commercial underwriting allows you to recast those numbers and capture that expense in a different way so that you don't hurt your current cash flow by impacting the numbers improperly. And consequently, determining value becomes more relevant based on those numbers. See, what people need to realize is this. Properly underwritten numbers tied to the loan-to-value calculation, which is the percentage of that total transaction that a bank is allowed to lend, has a relationship with value.
So, for example, if it's a $500,000 piece of property, you're going to put $100,000 down. That's 20%.
20% down.
Right, so you'd be an 80% loan-to-value.
Correct. All right.
And if you would, so if I have the rent roll and I have all the income coming in derived from that property, and I have all the expenses. It could be from a Schedule E or based off that MLS, numbers of what the true costs are. I put it into your system. I get it really a red light, green light type of scenario.
You do. You got a go meter condition, which is very, very detailed, so that you actually know point by point not only how close you are to a workable deal, but if you're just missing, it's literally going to describe for you how much you're missing in terms of based on the amount of income additionally needed to meet the green light condition, or how much expense you need to take off.
Or, like, so say, for example, the expenses are too high or the income's not enough. Maybe the realtor may have mispriced it. I mean, maybe it's really not worth what that market is calling for. I mean, does that happen?
This is the sanity check part of the program, in that sellers will very often grab a value that they just think that they deserve. But it's not really built on anything. It's just because they've owned the property for a very long time. And let's face it, the conditions under which they bought it, they may have owned it for 20, 25 years, may no longer be relevant. What commercial lending does is gives you a very finite path to determining the relationship between loan support and what is essentially a defensible price for that property in the marketplace. And if you find that the price that is defensible is very far away from the price that you'd like, chances are you may be one of those landlords who is run with low rents, and you may need to reseason those rents at a higher level in order to have a defensible sale price. You may need to economize the property from an operation standpoint in order to create more NOI that can service more debt, which will relate to more value.
So I think it's important for our listeners to understand that, Dan, you're not just a commercial loan broker, but you're actually an underwriter as well, right? I mean, so you know what goes into the underwriting of the file.
Oh, yeah.
Right? So your history is you underwrite for large loans. So when you present a package to the bank of what's bankable, or through HUD or through one of the agencies, that's already underwritten. And you built a system to basically replace you, basically artificial intelligence, a robot. You built yourself. But you share a little robot,
I would be good walking across the table.
A little robot,
yeah.
Dan Crowley robot. And really, you took everything in your mind of how you underwrite a file, and you built it to the system. So now when people can, really a DIY type of system, because I remember if I saw a building that I like, I would send it to you, and I'd say, Dan, what do you think about this? That building, after, tremendous amount of questions. And
well, I would beat you up.
Yeah,
you could say it.
Yeah, you beat me up. and when I would send it back to you, and you would say, hey, I'm going to call you in a little bit, call me, and then you say, this building's not worth it, and these are the reasons why, and get the Schedule E so you can really understand. And really, this is what the system's going to do for you without having to locate you.
The idea is, right now in America, we are on the back end of what was a tumultuous period of time with regards to the mortgage meltdown and the economic meltdown. And while what happened with home ownership is quite famous, and it's been cited in movies and chapter and verse, what a lot of folks don't realize is to what degree there was a big difference between regulated, sane commercial lending at the bank level versus other loan products that were made available that were a lot more porous in their underwriting decisions, and which really only teased people into the temporary ownership of income property, only to have it taken away from them a few years later. The reason that we built this is so that anybody can sit down and develop a core competency that's based on proven, prudent facts of how to approach an ownership condition, either in a refinance or in a purchase scenario, that will not only stand the test of time, but will become a core competency that they can use to make good investment decisions for themselves, and that it also becomes something they can pass on to their kids and their kids' kids. The idea that you can course correct just a couple of percent doesn't look like a lot at the beginning, but if you can actually learn this and protect yourself going forward, where you end up if you stay on the course you are, which is, well, geez, if they said it was okay to borrow, I guess it's a good deal, versus knowing in your heart that you've applied a set of rules that will protect you, where that person ends up who just goes with the flow versus where you end up over time becomes vastly different destinations. You arrive at a much better place as time goes on.
Because that person might put an offer in, think the property's worth it, think that it's going to get the deal. And what people don't realize is this is commercial property is really based. The underwriting is based on that property, right? So your system
it's only on the property.
So your system, you're not going to pull a credit report on this person.
Nope.
You're not going to say, hey, your credit score is 600. We need a 740. Credit doesn't play into.
It comes in later on. Let's put it this way: great credit cannot cure a bad property.
Correct. Gotcha.
All right. Whereas in other types of lending, maybe great credit scores can weigh in.
Right.
Now, you can cross-collateralize different assets. You can create blanket financings. But in the final analysis, that group of assets would still need to meet the same set of standards.
So it's called debt service ratio?
Debt service coverage ratio.
DS.
It would just go from being a single asset analysis to global. Meaning we were going to do a blanket financing and we were going to blend assets we were buying with assets we already owned. As a group, they would need to meet that same criteria.
So now if I'm a borrower or I'm a buyer and I want to, you're going to have some kind of interest rate to figure out what that number is going to become. How would I figure out what I think the market is for an interest rate or something like that?
It couldn't be easier. And it really just depends on at what level that you're lending at or borrowing at, depending upon your approach. You would, for example, here in New England, it's Easy Money New England. Well, the Easy Money New England index would be, if you're borrowing from a regional bank, go to the Federal Home Loan Bank Board Boston page, look at what are called the classic advances, look at the regular rate, and ideally the way most banks price an initial underwriting on a loan would be to look at the 5-year classic advance rate. 5 years. And then depending upon what they have as perceived risk levels, you're looking at a margin over that rate of anywhere from 2 to 2.5 and 3%.
So between 2 and 3%. All right. So between 2 and 3%, and that rate would be where you can kind of plug in the system.
The median rate right now today, I looked at the rate this morning, would be a 5.59 on a 5-year loan on a 25-year amortization because the index is at a 309.
Okay.
So you'd add 2.5% to that, and that's where your rate would be today. The amortizations will vary depending upon asset class. Could be a 20-year amortization.
On the bank too, right?
The different banks may have different structures. You may find that some banks will look at a certain asset class and only do a 20-year amortization. Some will do 25 or 30. As you know, if we're dealing in the HUD world.
We've been working with you before in the past. I mean, I know there's banks that go to a 30-year amortization on commercial. I know some that go to 30-year interest only. I mean, some of the things that are out there you wouldn't realize in the commercial world.
That's correct.
Also SBA world, right? So SBA world, you can actually put 10% down if you're going to house your business inside of the property, which that is not common knowledge.
And a lot of folks, SBA is probably the greatest resource for the business person, especially when they want to buy a property. If you were the person wanting to buy the environment we're in today, this is a single business.
Right. So
it's got a lot of facets
say this
here.
place was vacant, and Dave Garofalo, the owner of Studio 21 Podcast Cafe, if he was to come in and say, I want to put my cigar place in there, I want to put my Studio 21 Cafe, he would then punch this in the system and say, I'm going to actually move in there. He could put 10% down, and as long as, what would they use? Because if it was vacant, how do you figure out?
Well, let's assume that Dave already was in the cigar business.
Yes.
Okay, and he'd found this location. Right. Well, then he's an established business. If he's in business at least 2 years and he's not in what's called the special purpose category, which the cigar business is not, there are some businesses that are, but he would actually be able to finance up to 90% of the purchase of this property. 50% of it will be done by a bank based on what the terms are that they would like to make available. And the remaining 40% would be on a fixed rate 20-year debenture that is fixed for the entire 20 years.
Debenture. What is debenture?
A debenture bond is a bond that is sold based on the mortgage that is created, and an individual investor would buy that bond or a group of investors, depending on the size.
Gotcha.
Sometimes there could be multiple investors involved because debenture bonds can be anything as tiny as just a few $1,000s up to the SBA limit, which is 40% or $5 million, depending upon how large it is. So it's a terrific way to lock in a large percentage of your loan.
So could you also do SBA loans through your system?
Oh, God, yeah. We've built a template which is preemptive in the way that it gathers information that goes through and not only quantifies and qualifies all of the what-ifs that are built into an SBA 504 financing, but even goes as far as to qualify whether or not you'd qualify for what are called the additional green funds that are available through 504 if you were going to turn the building into being a LEED certified building, which is very efficient from an environmental and energy standpoint.
So if I was a bank, I'd want to be, your right-hand man, because I mean, obviously these banks want to lend money and they want to lend it on the commercial side of things. How do they get on your platform, or all banks on the platform? How do they get involved? I mean, are all banks automatically on the platform?
Right now, we have made the entire banking community identifiable through the system. What we are now building and making available to the individual banks is the added ability with connectivity through the system to be able to electronically submit the documentation and the underwriting that we've created as an active accept or pass condition between the bank and the borrower.
So Fannie Mae or Freddie Mac has their own automated engines for residential loans. You're basically creating that, but for the commercial resource.
We're it.
Wow, this is very interesting. I mean, if you're a bank, I mean, I would think if they're on the platform, they're gonna. They want to find loans just as much as anybody else. They want good clients. They want good clients, right? So this is a way of them to do that. So if I'm a consumer now and I press the button, I got a green deal. It says go, right? So I want to press that button and see the area banks that would be, how do I shop that? I want to find the best terms or the best rate, or how would I know which bank to go to?
Well, at this particular point, you're going to start off with proximity.
Yeah.
All right. Number two, proximity is broken down into two categories. There's geographic proximity, and then there's the proximity of maybe you know somebody at that particular bank. The idea is, are you looking for a new relationship, or are you looking to be able to communicate with your existing banker with a great deal of professionalism, respect, and just be able to be more effective with them? It really is. Think of it in these terms. When you travel internationally, one of the greatest things you can do is learn the language of where you're going to travel and put a smile on the face of someone in a restaurant when you order in French.
Yeah.
All right. Well, bankers, I have to tell you, commercial lenders are the most overregulated, overworked group of people out there. I mean, they really do go through a heck of a lot in order to deliver the level of service. I love these people. I mean, they really do a phenomenal job.
Well, you wanted to be one since age 9. So.
When I came out of the womb wanting to be a commercial loan officer.
And diapers.
I thought I was going to be a hockey player. I ended up not. But the fact that you can walk into your existing or prospective banker and be able to converse with them in their language, present information to them that is completely familiar to their thought process, and then be able to proceed respectfully, all the while knowing before you walk in the door, and they know when you come through the door, either it's that electronic, that virtual door, or that physical door at the front of that bank, that you are on board with them, they're on board with you. Remember you talked about the anxiety factor, waiting a couple of weeks for approval?
Oh, it's very, the anxiety.
You know what?
Is real.
You don't have the anxiety, and they don't have the trepidation. They already know
when they have that drop, that commitment date. If you're not going to, there's always a possibility you lose your deposit if the bank isn't working quick enough. So if you give them all the information up front, it's going to streamline that process. So say, for example, I get that green deal. I get to go. I look at the proximity of what banks are around. I'm like, oh, this bank, they're around me. I know the banker over there. I'm going to go see them. Can I print out my green type of system?
Your one sheet, which is what we've produced, it's an industry standard. It is exciting because everything that's gone into the underwriting is aggregated on the CLS one sheet. The one sheet shows it all. And just staring right at you in the middle of that one sheet is the debt service coverage ratio, which is the primary measurement of success in this process. That all your supporting data is there as well, but that go meter validation with the debt service coverage ratio showing a glaring green condition, it screams at them more than anything else on the sheet. And what's even more exciting is that, especially when I was doing this just from the consultancy standpoint, because I've used my various versions of the one sheet for years, but even more so now that we've got the program and we've gone through all of our major testing and utilization over the last couple of years, because it's taken 2.5 years to get to this point. The banks that were actually part of our beta, and we did it with real live deals, clients who really needed money, situations that really needed a lending component. To walk into those banks after I had already submitted all of the data electronically, there was nothing more exciting for me than walking in and seeing our one sheet with our loan package pinned to the back of the bulletin board right behind the lender, and then having he or she tell me the story of, not only how impressed they were with it, but how many people around the commercial loan department in the bank came in and said, what the heck is that?
Right.
Grabbing it, looking at it, thumbing through all the pages, and just saying, holy cow, because they hadn't seen it before. So it's new.
I mean, it's fascinating. And one of the things that I like to add is in the residential world, we would say garbage in, garbage out. So you got to make sure what you put into the system is accurate, right? So
beware of round numbers.
Right, beware. So if it says expenses $3,000 a month for taxes,
beware of round numbers. Get a schedule. Accuracy is everything. I mean, if you're a buyer,
if you don't get the real numbers through the underwriting process at the bank, that's their job. You're going to give them the one sheet, but they're going to make sure that those numbers are accurate. So whatever you give them, as long as they're accurate, that deal's going through. So
you may as well input the right information the first time.
Exactly, and that's what we say in the residential world is if you have the right numbers, you already know ahead of time.
Absolutely.
And those engines are already built. But it sounds like the commercial loan success. I mean, this is built for all commercial deals.
This is everything.
Which is very interesting because, I know the banks, let's face it, banks, the resources of a bank, there's not a lot of community banks anymore. I know that when I go into a bank, I would much rather a community bank versus, a conglomerate because you don't have that one-on-one type of relationship. They don't look at you globally like say a Bank of America. They don't know that you're a big client there or if you are a big client or if you're a small client, doesn't matter, but they don't look at you as a whole. They just kind of look at you as that transaction. As a community bank, there's more of a relationship there, and how does that work? Because community banks are getting really pinched.
Community banks they represent some of the finest people out there in banking, especially in the commercial lending group. And when we speak at a lot of community bank association functions, and we've gotten to know a lot of these people. They live where you live. They go to church where you go to church. They shop where you shop. Consequently, the way that they treat you, if they don't treat you well, it's going to come back to bite them. But their predisposition is they really are parts of the community. Not that the people who work for larger banks, super regionals and nationals, aren't part of the community. They are. They all work very, very hard. I don't think that you would want to ever be disrespectful to someone based on the size of the institution. But at the community bank level, they tend to sponsor things. They'll do the bake sale. They'll do the Little League, uniforms. Right. And frankly, they want to do the best for their communities. They really do want to play a key role in there. Love community bankers. We've communicated with a ton of them as we've fine-tuned what we've done. We wanted to make sure that we weren't missing anything in terms of the kind of information that they'd like to receive and the way that they'd like to receive it. So creating that portal has been critical.
So really, community banks versus big banks, it all comes down to the people you're working with. It doesn't matter if so-and-so works for this mortgage company or works for this bank. It's you're working with people. It's the people that make up the.
They all want to do a good job. Yeah. They all want to help you.
But some of these banks, they have different guidelines or they have different structures, right? And so one bank might do a 30-year amortization, where another one says, I would never do that. I'd just do a 5-year amortization.
Here's what happens inside of banking. You'll have asset classes, apartments, mixed use, straight commercial buildings. And depending upon the composition of their particular lending area, what we call their lending footprint, is they will occasionally have a certain bucket fill up, meaning that they've done too many loans of a certain type, maybe apartment properties. Just came across this with one of my favorite lenders, who's an old friend, his bank is actually based in the city where we wanted to help one of the largest realtors in that city, who's one of my clients, be able to do a loan. It just so happened, because they're headquartered there and my clients, all of his buildings are at that location, they simply had filled up the multifamily bucket. They couldn't lend there. Fortunately, Lender Central says, let's talk to this bank, and we click on another one, and we are able to talk to the lender at that particular bank. We speak to the commercial loan department. The analysis is the same. We might fine-tune it just based on there being slight differences in how they price the loan or the amortization they use, but it's completely flexible. It changes on the fly. We just reprint the one sheet with the new criteria, and boom, we're in the bank. We're having a real conversation. And we're either helping the client or the client is helping themselves play the role of financing broker for their own deal.
Okay, so we talked about if I'm a consumer and I'm walking, I'm going through the city and I see a property for sale and I kind of do it myself, I would think this is very powerful for a commercial real estate broker as well. I mean, the commercial real estate brokers kind of use your system and say, hey, I'm going to base my price. I'm going to send it to my seller and sit down with the seller and say, look, based on the debt service coverage ratio.
Sure.
Right.
And the loan to value.
And the loan to value. This is kind of what the property is worth. Now, if someone goes in and says, hey, you know what, your market rents are a little low, I'm going to raise them. Well, maybe you can make, maybe put that part into the deal, maybe the below market rents. But other than that, is this a great tool for a commercial realtor to use?
I will have you understand it from this particular standpoint. And I'm going to bring it really close to home for you. Your brother, who is, C21 franchisee, running one of the most prolific Century 21 operators in the Northeast, played with the software for a while and said, this is a game changer. Because what it is, it's a massive empowerment tool for anybody who wants to go out and
So if I'm a residential real estate broker, this will help me sell commercial buildings as well. So, when someone says, hey, I got a commercial building, and they usually refer it to a commercial broker or something like that. Are you saying that a residential real estate broker can really get good at commercial much easier now than before?
I've been mentoring residential real estate brokers for years, many of them in your system, many of them around the country, on being able to add that additional core competency to their professional skill set. What this does, it turns it into basically an on switch. You can literally turn on that side of your brain. It's like imagine you've been a residential realtor for years. And in the metaphor of a residential realtor, let's use the Brooklyn Bridge, all right? And your 1 through 4 family business has been the side of the Brooklyn Bridge that lands in Manhattan. And you've had a toll booth on that end of the bridge for years, all right? And you've been collecting tolls every time somebody goes over that 1 through 4 family side of the bridge. Now you decide you want to do commercial. Commercial is represented by putting a toll booth on the Brooklyn side of the bridge. And suddenly you're catching the traffic in the other direction.
You're missing all those commercial plates that are going by. All those,
not anymore.
Not
anymore. They're going through your toll booth now. And you've got not only the tools to effectively analyze, but we back it up with an educational system and mentoring, which actually makes you a powerhouse. You go from not doing commercial at all to being a sales and listing dynamo in commercial if you follow the system.
So you talk about a commercial, and we talk about residential realtors. We talk about consumers. Mortgage loan officers could also.
Absolutely.
They can kind of use this system as helping their clients find out if it's going to be a green light or a red light.
Especially if it's a contingent transaction. Because what will happen in your world quite often is that you've got somebody who wants to buy a house. Right. And their ability to buy that house may stem from the need to refinance a different type of asset. And it could be a multifamily property that's in that beyond 4 family category. Right. If you're or somebody who's in the residential mortgage business wants to add an extra level of service and put on that commercial hat and be able to help them fine tune their ability to go out and refinance that property to get the down payment funds they need for the primary transaction. What they've done is they've made themselves even more valuable to that buyer. Absolutely.
So we talked about a consumer, we talked about a realtor, we talked about a loan officer, and then the bank. I mean, is the bank actually using the system in the back end too? Because, I mean, if the system, which I'm sure it does, is telling you if it's bankable or not, I'm sure the bank's using that system too.
Many banks have tested it. They were major part of the beta when we rolled it out. And what's happening now is we're going through an institution and regional screening process where we're going to actually start making the bank version of the analytics available and be identified in CLS Lender Central as being a CLS-equipped bank in the system, so that if you're a user of the software and you see any number of banks that are sitting out there in bank land, the iconography in the system is going to identify which banks are simply available to you and which banks are also using the same analytics that you're using, which will build more of an instant rapport between the bank receiving the information and the user of the software. It'll actually streamline the process. It'll really create an intertwining and almost an immediate one-on-one rapport, instant trust between the two because they're using the same analytics.
Doesn't that make you more accurate as well, pulling from the bank side?
Oh, absolutely, Jonathan, without a question.
So we talked about all the different people this could impact, especially the buyer, even the seller to find out the price. But what if I'm one of these people, how do I get more information? How do I sign up? How do I start using it?
Well, you can go to commercialloansuccess.com.
Commercialloansuccess.com.
Yep. They're great introductory videos. There's a terrific video when you scroll down for each and every what I call demographic class of user. We've provided introductory videos. You've got tremendous amounts before you even subscribe and become a member of the program. You've got lots of information in there, lots of Q&A, lots of examples. And then, of course, we've got the mentoring program. You can call to our 24/7 support team. They're there. They're waiting to answer your questions even before you become a member. We're on your broadcast today, but our tutorials are available online. Once you get into the system, the amount of education that we're providing is growing on a daily basis for both property investors as well as for business owners or prospective business owners, someone who wants to figure out if they're on the right track and what they would need to do in order to be able to forward a business or even create one. Because there are resources for financing new businesses.
And how much does it cost to kind of get on your platform? Because right now I'm saying to myself, wow, this is a great value. I mean, to get this into the hands of people is a great value.
We have a call to action right now that is on the site. And what I will do is I'm going to frame it this way. Yeah. For less than half the cost of America's favorite donut, you can have access to this system.
Is that a Krispy Kreme donut?
Well, it depends on what part of the country you're on.
These donuts Mr. Jonathan, David Raffles, a big fan of donuts.
He's a big fan. Yeah. I believe he would say the Cane's donut would be the top donut.
That's like a $6 donut.
Well, I'm going to go with one of the most widely distributed donuts. But let's put it this way: it's far less than $1 a day.
That's great. I mean, that's you're going to have the power in your hand much quicker than someone who has to break down the numbers. You have to locate their bank and to find out if it's bankable. You got to find the guy, and then you got to get him all the information so you can break it down and say, hey, this might work, this might not work. You might be out a week, 2 weeks. You might be on vacation. You might not be quick enough to kind of get that offer in there because you kind of want to know if it works before you put an offer because it's very difficult to kind of take that offer away once you give it, right? So, I mean, I think that, by getting this information, say, look, I'm going to offer you this, but this is the reason why. Here's my one sheet. This is what the property truly cash flows. This is what the debt service is, and it's not bankable otherwise. So either you take my offer or we talk about, maybe I can raise rents or find out if the market value is there and the market rents. So, I mean, is that...
It creates and it leads both parties toward what is eventually a balanced transaction. It creates a win-win scenario. All right. If people who are in the residential sales business have had experience with folks that are pricing commercial property, it can be all over the place. And it's very frustrating for a seller when a property sits on the market for a very, very long time. And it's embarrassing for an agent or a real estate salesperson when they listed the property and they can't really explain why it's been on the market for a very long time. Well, in using these analytics to come to some very finite conclusions about what they can do to fine-tune and season the property operations to command a better price or closer to the price that they want, being able to create an action plan because you can analyze it, it really is very soothing and comforting to know that you don't just have to sit there and say, why is it on the market so long? You can fix it. We can teach you.
And this is good on any commercial property. So if it's public storage, if it's storage facility, if it's a mobile home park, if it's
now we're talking my language.
Yeah, double wide, Jonathan.
That's right.
Right. So Jonathan's a minimalist. He wants to own just a double wide, but maybe you want to own a whole mobile park.
I could have 30 double wides. Maybe a couple of singles.
We can work with that, Jonathan.
All right, I'm in.
And then you can go to like Utah and every single one a different way.
That was it.
I love that, right? Now he's thinking.
No, the wheels are turning.
But yeah, so a mobile park, public storage. What are some of the other property types that this could be?
Here's
multi-unit
People need to know this.
Residential.
If it's more than 4 units, other than raw land, it's commercial.
It's commercial. But what happens? A big box. Say it's a Walgreens or something like that.
It's a national credit tenant.
Yep.
It's financeable.
So you're still
And
getting.
not only that, it's got a bond rating, which means you've really stepped in a good one.
So if you got that true expense and true income coming in, you could still put it in the system and see if it's bankable.
In 5 minutes.
Wow.
5 whole minutes. 5 minutes to perfect clarity.
Very interesting.
Think about that. 5 minutes, and then for the next 3 weeks, you're not wringing your hands wondering if it's going to be approved.
Right.
All right. You know, and everybody else knows that it works. It makes life easy.
Well, I'm signing up.
It's relaxing.
I'm definitely signing up. I know it's on the beta, but I got to start playing with some numbers.
Rodney's back.
Rodney Dangerfield.
Love this music.
Easy Money New England. We like to say there's no such thing as easy money, but we always trying to bring it, trying to make it easier. If anyone wants any information on the show, contact Dan Crowley or email us at info@newfed.com, and we'll get you to the right place.
And there's going to be a new Fed coupon code.
New Fed coupon code. You heard it here first.
You want to go back, subscribe to the site.
Thank you.
It's a new day, it's a new way. Call 877-NEW-FED-1. It's a new way.
Hi folks, it's Brian DAmico, owner of New Fed Mortgage, and I'm really excited to introduce Fast Track Mortgage, our new online system that gets you approved in less than 15 minutes. Whether it's a refinance or a new purchase, just go to newfed.com anytime, day or night, and click on the Fast Track Mortgage button. Fill out the form, and within 15 minutes, we'll approve your loan at the lowest rate possible. Don't waste time dealing with big banks. We're local and here to help you close your loan fast. Just go to newfed.com 24/7 and get approved in less than 15 minutes. Fast Track from New Fed Mortgage. Now that's a new way to get the loan you need fast.
877-NEW-FED-1.
Subject to credit approval, Equal Housing Lender, NMLS number 1881. Call us website for details.
877-NEW-FED-1.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21 Podcast Cafe, the United Podcast Network, its partners, or affiliates.